All right, so in order to be consistently profitable, you have to be, or have to have, should I say, consistent execution. So it all starts in your head. Now that we have a better understanding of what we must do to become profitable over time in a physical sense, we must go deeper in how to approach this from a mental perspective. So I cannot overstate the importance of keeping an open mind as you continue to learn and grow. Just as in life, we must allow beliefs and ideas that do not serve us to be replaced by new and better ones. It is this constant evolution that allows growth and the ability to evolve and get better. Once you stop growing, you start dying. The more we allow ourselves to learn, the better we can assess the current environment and anticipate the probabilities in some future moment. When we think we already know what should happen, we are closed to the idea of future important information the market is trying to relay to us. This is not useful or effective. The deeper the level of our understanding and insight, the more effectively we can interact with the environment to fulfill our needs and goals, says Mark Douglas. This quote sums up the previous perfectly. We can only continue to gain deeper understanding and insight if our mind is constantly open to new information. It is part of the reason that trading is a journey without a destination, or that it is impossible to be an overnight success. It takes time to allow new thoughts to develop, take shape, and then overtake old beliefs. This is also why a journal is so important. The truth is that we will quickly forget the details of yesterday, much less than last week. We cannot have a solid sense of where we are going without first understanding where we have been. A path to improvement. Every should have, could have, would have, or if only is an indication of the degree of illusion in which we are indulging ourselves. If we could have, we would have, meaning that at each moment we are doing the best we can when taking into account all the components, both conscious and subconscious, that affect what we perceive and do. We have to be willing to confront the truth about ourselves so that we can confront the truth outside of ourselves. The less illusion we indulge ourselves in, the more our perceptions of the outside environment will reflect the actual conditions, because we won't be blocking so much available information. By available information, I mean information we are capable of perceiving. What better form of goal achievement could there be than to confront conditions as they exist, identify what we need to learn to operate most effectively, and then go about the task of learning it, making our adjustments along the way, says Mark Douglas. So again, pretty self-explanatory, although that's pretty hefty, right? We could probably unpack a ton of that, but I'll leave that here for now. But again, you can also break it down to the simple element of, we can say all day, man, I should have done this, or I could have done this, or, but again, if you could have, why wouldn't you have? You know, often it's because we just don't know. And that's okay, right? This is a learning process, and it's a learning process that never ends. But the goal is to not make the same mistakes twice and to improve, right? As we discussed earlier. So, that being said, you just must maintain an open mind. I think I'd said something earlier, you know, if you're not growing, you're dying. And so as soon as you think that you know everything there is to be known, you've essentially lost. The market is right there around the corner, ready to humble you. All right, let's move on. So every emotion that comes to the surface during our trading, good or bad, is rooted in a conscious or subconscious belief. We should take time to investigate them, to meditate on them, and ask why we are feeling a certain way, with a focus on the strong emotions first, as well as the ones that seem to impact you often, as we spoke about earlier. Our beliefs and our trading plan must be in harmony, otherwise our emotions will always be in conflict with what we are trying to do and accomplish. And honestly, there's just no way, there's no path to success while that continues to happen. The master of trading psychology. So any of us can click a buy or sell button. When you choose to buy and sell, all comes from what you have decided between your ears. That decision-making process is a result of the sum total of all the mental components interacting with one another. In any given trade, there are a number of possibilities to take profits or cut losses. What we decide to do in each instance with respect to each possibility will be the result of our perceptions and all the internal components affecting those perceptions. So keep in mind that you can't physically control what the markets do. You can only learn to control your perception of the markets to share the highest degree of reality, or the least amount of distortion, with everyone else who is participating or who has the potential to participate. The more sophisticated you become as a trader, the more you will realize that trading is completely mental. As a trader, it is more important to know that you will always follow your rules than it is to make money. Because whatever money you make, you will inevitably lose back to the market if you can't follow your rules. You need to stay focused on mastering the steps to achieving your goal and not the end result, knowing that the end result, money, will be a byproduct of what you know and how well you can act on what you know. Right? So, when we talk about consistency, that is it right there in a nutshell. All right, thinking in probabilities. The big psychological problem here is that people have difficulty acting on opportunities with probable outcomes. Most people like to think of themselves as risk takers, but what they really want is a guaranteed outcome with some momentary suspense to make them feel as if the outcome had been in doubt. So I'm just going to stop here real quick. I think this hit the nail on the head for me for so many years, right? We read enough things, we read enough books, we listen to enough people that tell us, you can do this. If you just try hard enough, if you just keep learning, you're going to make money, right? If you just follow your rules, you will make money. So we think that, okay, I put together a plan. It looks good. If I just stick with it, then I'm guaranteed to make money. Once you get to that point where you understand just enough to be dangerous, and you set up some rules and you stick with it, and then when it doesn't work out, you don't stick with it. You don't even stick with it. I mean, most of us, early on, we don't stick with anything, right? Because we don't understand essentially the way that the markets work. And so, again, I'm going to read it again real quick. What they really want is a guaranteed outcome with some momentary suspense to make them feel as if the outcome had been in doubt. So it's essentially what we think we know for sure that we're going to make money, but it's just, sometimes there's some losses. Sometimes that's okay. So we trick our minds to think that it's a guaranteed outcome, that we're definitely going to make money if we just follow our rules, even if we don't know enough of what we need to know, which is just silly at the end of the day, right? So, I don't know. Again, it's stuff like that that really messes with me, and I like to ponder and think about it. Because if there's a guaranteed outcome, you're not actually taking any risk, and the market is full of risk. And there's no way to mitigate. There's ways to mitigate the risk, but there's no way to remove it. So, anyways, that just hit really, really hard with me. Maybe it touches you too. I don't know. So you need to understand what technical trading systems are not designed to be outguessed. And what I mean is, they aren't designed to give you isolated signals of an opportunity to be taken when it seems right. What they do is mathematically define, quantify, and categorize past relationships in collective human behavior to give you a statistically probable outcome of the future. Again, by Mark Douglas. So again, it's a rule-based thing. Rules and trading are not meant to be broken depending on your feelings, depending on what you think might happen. It's a statistically set up thing that if it was a machine and it wasn't yourself, and it was perfect, that over time it would make money. The biggest variable is ourselves. So, take a moment and really think about that first paragraph. When you expect a trade to be profitable and you lose, then your emotions will automatically reflect the outcome in a negative way. And this is cause and effect. When we do not expect anything and truly believe that, then we should not have either positive nor negative emotions tied to that result. We are not robots, so expecting no emotion is impossible. But we can quiet them down to the point that they do not interfere with or influence our decision making. Write it down, underline it, circle it, whatever you need to do to remember that key point. If we have no expectations and our emotions are at peace, then we can focus 100% on reading current information and execute our strategy to the absolute best of our ability. Never stop learning. So your objectives are to 1. Learn the skill of flawless execution by learning that you can follow the rules you set forth for yourself. I'm defining flawless execution as executing a trade immediately upon perception of an opportunity. Inclusive within opportunity is the opportunity to exit a losing trade. 2. To incorporate a belief into your mental system about the nature of probable outcomes so that you believe that you can make money in the long run with your trading system if, of course, you can execute it properly. So what's possible? Stay focused on what you need to learn, do the work that is necessary, and your belief in what is possible will naturally expand as a function of your willingness to adapt. So what does that say? It goes back into keeping an open mind. Your emotions and your thoughts and the results of your trading will let you know if and what you need to learn. And also that you have to execute consistently. Right? So those are the main key themes. Now that we have properly addressed why mindset is so important and how it can impact your trading negatively as well as positively, we will begin the transition to a focus on the skills we need to develop. Remember that the road to self-improvement is a lifelong journey, and that as you continue to work on your mindset in trading, the benefits will pour into your personal life in a meaningful way as you continue to learn more about yourself and how your mind works. So what is success? One of the most important goals I had for this course was to introduce the proper mindset it takes to become a successful trader. So let's talk about the concept of success. For me, success in trading constantly evolved and never had a final destination, and it still doesn't. It started as a pursuit of money, but became something much deeper. For me, it is all about the journey and learning to become proficient in something that most will never even understand, much less than become good at. You must come up with your own goals, and I do believe you should have short, medium, and long-term goals as well as what you define as success, even though over time it may change, and that's okay. You must have something you are striving for to achieve, otherwise when times get tough, it is easy to fall away or revert to old destructive patterns. Take the time to write these things out and hold them high, and work fiercely to achieve them, but give yourself grace when it takes longer than you expect. This is a marathon, not a sprint. Just like our old beliefs and our old goals, they will fall away as new ones emerge, and that is perfectly okay and expected, but we must start somewhere.